Welcome to the KIS Investing Golden Trade of the Week. Gold has been punished up to the wazoo. The US dollar keeps devaluing, so it's weird. Why is gold going down when the dollar is going down? It doesn't make sense. Well, let's not think why. Let's see how we can take advantage of this situation and make a little money for ourselves. So, all right, let's go and take a look at our golden trade of the week.
Let's start by opening our tastyworks trading platform. And let's take a look at where gold has been trading for the year 2020. As we can see, gold started trading the year around $145 and then it zipped up higher to almost $200 per share in this GLD ETF. Since the month of August, gold has been taking a pounding, a beating, and is now below its 20-day moving average, shown here in red. It's below the 50-day moving average, shown here in yellow, and it's now below, unbelievable, it's below the 200-day moving average, shown here in white. And I think gold is overdone. It's oversold. Inflation is roaring, and people need to protect their money, and gold is a perfect place to protect your money against inflation. Now, what type of trade do I want to place? I want to place a defined risk trade because gold moves a little bit crazy and I don't want to have unprotected risk from both sides. But I think gold might trade sideways to a little bit up and maybe trade within this area between $168 to $175. So how can I profit by putting a trade here? Let's go to the trade page. We all know that an iron condor is a symmetrical trade that normally could be 1 wide, 2 wide, 5 wide, 10 wide, etc. I have chosen this iron condor to make them 5 wide. That means I'm selling the 165 put on GLD and buying, to define my risk, the 160 put, and then I'm selling the 175 call, and to protect my risk I'm buying the 180 call. And why is this a skewed iron condor? A skewed iron condor means that the strikes are not symmetrical from the at the money. The at the money right now is $167, and you can see our put side is only about $2 away from at the money, and on the call side it's $7 away. That is why it's called a skewed. It's skewed to the upside, meaning we're leaving here a little more space, more room to run for gold to go up to the upside. On a normal symmetrical iron condor, our puts and our calls would be the same distance from at the money. Now, if you have heard the term unbalanced iron condor, an unbalanced iron condor is when the width of the strikes on both spreads are not the same. For example, if we moved the 160 long put to 163, and then we would have a 2 wide spread on this side and 5 wide spread on this side, this would make it an unbalanced iron condor, which is not what we're doing today, but I wanted to show you what an unbalanced iron condor is. And this is a skewed iron condor. Since our spreads are 5 wide, you know, as a trade can only go to the width of the strikes. So this trade can only go to 5 points, meaning $500. If we are collecting $2.28 for our trade, that means our maximum profit for this trade would be $228. And our maximum loss will also turn out to be the difference between 500 and 228, meaning our maximum loss will be $272. The buying power effect for this trade will be $272 per spread that we do. Here we can take a look at our trade is selling the 165 put in January, buying the 160 put, selling the 175 call, and buying the 180 call to protect ourselves on both sides. Now let's take a look at this trade graphically. Here we can see clearly where we're selling the puts. We're selling them at 165 and 175, and we're buying the 160 and 180. And the green part, this is why I love the tastyworks platform. The green part shows us where we will make our money, and the red part shows us where we start losing money. Here you can see that our break evens for this trade are 162.5 and 177.5 on the upper side of the trade. So what we want is gold to go up a little bit, but not too much, and hopefully not go down at all. Because here on the little circle, we can see that gold is trading around $167 right now. So if you want to play gold and you want to play it a little bit to the upside, and you think gold might stay on a trading range, of course, you can place this trade. Now, if you are more neutral on gold, you can move your strikes down and go with something like this. And then you would have a symmetrical iron condor. And it all depends on what you think it could happen or will it happen. In my point of view, I think gold will probably stay within a trading range, but skewed a little bit to the upside.
Thank you very much for watching our golden trade of the week. If you liked this video and you thought it was useful, consider sharing it. Also, click the little bell so you can get notifications when I publish a new video or a new trade idea. And also, click like, click subscribe, as it helps me with the YouTube algorithm. And remember, if you want to learn about personal finance, I have a free course below, the 9 proven steps of how to become a millionaire. And if you want to trade using the same trading platform that I use to place my trades, please link below to the tastyworks affiliate account. It's crazy out there. Take advantage of what the market is giving you with our golden trade of the week. Also, these trades are not recommendations or suggestions. These are just ideas of how I am trading my own money in my own account and with my own risk tolerance. Good luck trading, everyone. The end of the year is going to be wild, I believe. I hope it's going to be wild. And remember, you gotta risk it to get the biscuit, baby.